Now I move to the fifth asset. What is that fifth asset? Urban land. That means rural land is not a, what is it? An asset for the purpose of the wealth tax. Urban land is an asset. Here also we should know what are the exceptions, because exceptions is most important. See, I got an urban land near Shamshabad airport, in the immediate vicinity of Shamshabad airport. Now I want to construct a building. I am moving for approval. Government says you can't construct the building in that particular land. Already I am crying. If you say that land is an asset, you pay tax on that wealth tax on that, I will be double crying. So the point here is, land on which construction of a building is not permissible under any law for the time being in force is not to be included. Similarly, land occupied by any building for which building approval is already there. See, building and land appurtenant thereto is an asset. So, on the land, if there is a building, whatever the land that is being covered by that particular building is not going to be treated as an asset. Then, any unused land held by the SSE for industrial purpose. There is a land, I am claiming that I kept that particular land for my future use for industrial purpose. चलो एक्सेप्ट कर दिए, उसको हम एसेट नहीं मानते, इसको इंक्लूड नहीं करते, मगर कितने साल तक? For how many years you can go on saying that vacant land is kept for the industrial purpose? Maximum permission is 2 years. 2 years के बाद, even if you say that land is kept for what is it, industrial purpose, it is to be included. Similarly, Krishna Reddy Saab is having an urban land, plotting कर दिए उसके ऊपर. अब उन्होंने क्या बता रहे हैं? This is held by me as a stock and trade. मगर क्या कर रहे हैं इन्हों? उसको नहीं बेचते, उसके ऊपर कुछ भी कंस्ट्रक्शन भी नहीं करते. ऐसा 10 साल तक तुम्हारा गेम चलता भैया. In case if you are holding the land as a stock and trade for a period of 10 years from the date of acquisition, it is not to be included. यदि 10 साल गुजर गए तो, and if you are not doing anything, then it is to be treated as a asset. So these are the specific things which you should keep in the mind. Write down. That is, see, when I am asking you to write with a smiling face and a feeling that Mr. Chakravarti is helping. This is the last and final time I am going to spend my time with wealth tax. That's the reason why you are asked to write. This is not for me. For you, you should have such a feeling that other way around, it will not take more than 3 to 4 hours to just read out what I am doing, friends. A great explanation? No, no way. It's not an expertise that is required in CA teaching. It is the patience and consistency and continuity, both for the teacher as well as the student. Because many a times our professional examinations are test not for the intelligence, test for the skill, memory skill. How you will be able to remember? Reading, listening, writing. Out of these three, Great people say what? Listening, reading and listening are inferior items compared to writing. Knowledge acquisition also 4 modes are there: reading, listening, writing and experiencing. Out of these 4, which is more superior? Experiencing is more superior. But friends, not only in CA course, in any course, experiencing will not happen at the time of study or at the time of training of all the aspects. Some of my articles go on crying on me. You don't expose us to different facets of the practice. Even if I try to do, it is not virtually possible. For 2 reasons. Time is a limitation. Second is, one chartered accountant firm is not expected to have all the different things which a chartered accountant can do. So naturally, a trainee suffers from certain limitations in any training program. So what is most important to become a chartered accountant is not that all you can experience in real time, at least your mind should be able to feel it. Right? Poet, will he go to a place and write? He will visualize it and write. You are all supposed to become Kavis. Kavi Hrudayams should be there. Poetic heart and brain should be there. Even where the sun cannot enter, the poet will be able to see that and write beautiful poems and stories. Chartered accountants are expected to write good stories. Start writing. That is urban land. Urban land. Exceptions. Exceptions. Land on which construction of building is not permitted. Land on which construction of the building is not permitted. Number 2, land occupied by the building. Land occupied by the building constructed with approval. Constructed with approval. Then unused land. Unused land held by the SSE. Held by the SSE for industrial purpose. For industrial purpose. For a period of 2 years. For a period of 2 years. From the date of acquisition. From the date of acquisition. Then fourth exception is, or third exception is, land held as a stock in trade. Land held as a stock in trade for a period of 10 years. For a period of 10 years. Friends, in this context, try to understand what is an urban land. Many times you might have studied, it is the one which is subjected to the jurisdictional area of a municipality or a municipal corporation or a notified area committee or a cantonment board where the population is not less than 10,000. Then friends, within 8 kilometers from this also shall be construed as a, what is it, urban land. because considering the urbanization needs, we said within 8 kilometers from this particular jurisdictional area, still that land is considered as an urban land. Now, 2 or 3 issues here beautifully presented are: SC constructed a building. SC constructed a building on a land, but for that construction there is no approval. What we said, land on which construction, for the construction approval is not there, should not be included in the net wealth. But एक आदमी क्या करे, बिना परमिशन बिल्डिंग कंस्ट्रक्ट कर दिए. Even when there is a prohibition, he constructed a building. तब क्या होता दोस्तों, वो वैसे जो लैंड है उसको इंक्लूशन करना पड़ता. Land on which construction is not permitted is excluded. Yes, but construction is not permitted, you constructed illegally. So वैसे land का you have to include the same in the wealth is a point as a penalty. Then friends, see, X owns a land and gives the land on lease to Mr. Y for 25 years. Y constructs the building on the said land. Now, in respect of that particular building, what is it? The lessee is the owner and it will be included. For the land, who is the owner? That is Mr. X, and in his net wealth, that land value will be included as a point. Similarly, plot of land is purchased by the SC for the industrial purpose on 1/1/2009. Construction of the factory started on 30/6/2009 and is completed on 31/12/2012. What we are saying, as on 31/3/2009, such a land is not an asset because you are holding it for your industrial purpose. As on 31/3/2010, land is not an asset. Why? Because your construction and all you started on 30/6/2009. So, as on 31/3/2010 also construction not completed and that land is held for the industrial purpose. So, it is not an asset. But by 31/3/2012, what is happening? That is, you have started construction. So, land is considered as an asset, and by 31/3/2013 on that land there is a building, factory building. So, land on which building is constructed is not an asset, but what is it? Building as such is going to be treated as an asset, but if it is held for the purpose of the business, then it is not to be treated as an asset. See, incomplete structure is not a building, is the point you should remember. Incomplete structure is not a building. So, these are the things which you have to remember. One more example here is, X purchased a residential plot on 1/1/2009. Construction of the residential house started on 30/6/2009 and is completed on 31/12/2012. See, you purchased a residential plot. If it is an urban plot, definitely it is to be treated as an asset. Even as on 31/3/2010 or 2012 or 2011, it is to be treated as land and it is to be treated as an asset. But since the construction got completed on 31/12/2012, by 31/3/2013, what will happen? That is a building and land appurtenant to it. On that basis, it becomes an asset. Again, classification, is it a land or is it a, what is it, a building and a land appurtenant thereto? If it is a land, whether it is an urban or rural, if it is an urban land, it constitutes an asset. Then I move to the next asset, cash in hand. Write down cash in hand. With respect to the cash in hand, what is the point, friends? With respect to the cash in hand, point is, if it is in excess of 50,000, in case of individuals and Hindu undivided family, then it becomes an asset. As far as companies is concerned, you can hold any amount of the cash as long as it is being recorded in the books. If it is not recorded in the books, there is a search and huge cash is available, it is not recorded in the books, then such cash will become the assets as far as the company is concerned. Other way around, for company assets, whatever the cash that is recorded there in the books is not to be treated as an asset, and bank balance anyhow is not an asset is a point. Write down, friends, cash in hand. In case of individuals and HUFs, in case of individuals and HUFs, cash in excess of 50,000, cash in excess of 50,000 shall be treated as an asset, shall be treated as an asset. Now, our beloved student Krishna Reddy is already smiling and saying that, sir, anyhow under the wealth tax law, what is most important, as already you explained, valuation date. So valuation date there is a suggestion from him, let the SSC deposit excess cash over and above 50,000 in a bank, so that it will not be treated as an asset for the purpose of the wealth tax. But Mr. Krishna Reddy, you should remember one point, that is, under the wealth tax law, after all 1% is the tax. In case if I am going to deposit based on your intelligent suggestion into my bank, many questions will arise. From where you got this cash? Is it out of sale of goods or out of services? यदि आप सेल्स टैक्स भरे नहीं तो सर्विस टैक्स भरे, क्योंकि बैंक में एक बार पैसे आ गए बोले तो उसका सोर्स का तो कैसा भी हम एक्सप्लेन करना ही पड़ता. तो you are all doctors, right? Doctors for the companies, financial matters. Don't just give a tablet like that. You should also understand the point that already the SSC is a sugar patient and the BP patient, hypertension patient. If you and I get small diseases or small accidents, doctors can treat very comfortably and coolly. But if a person is already with hypertension and the sugar, so many factors first they should stabilize before the operation gets carried out. Similarly, with multiple diseases, if you are, then you require a team of good doctors who will be knowing the implication of one drug on the other disease. Like that, as a chartered accountant, you should not only look at only one aspect of it. You should also understand what we are doing. Implications are there under the income tax law, wealth tax law, service tax law, Companies Act. All these implications you have to keep in the mind and do. That's where MCOM differs from CA. Otherwise, CA is a glorified MCOM. But for your information technology skills, IT skills, today a CA qualification without IT skills is waste. Right? So, I advise all my CA final students to get all those IT skills which are required for the industry when you are more planning for the industry. Chalo. Back to the point. Write down, in case of company SSCs, amount of cash not recorded in the books of accounts, amount of cash not recorded in the books of accounts shall be treated as an asset. Shall be treated as an asset. So in case of the company assets, let them keep any amount with them as being recorded in the books, then it will not be treated as an asset. But for individuals and HUFs, 50,000 rupees of the cash. In excess of 50,000, it is to be treated as a, what is it, wealth, even when it is being recorded. Then friends, that's why when we file the returns, cash balance, sir, for an individual, if it is 12-15 lakhs, is it okay? Okay, as long as he is not having a wealth of 30 lakhs. In excess of wealth of 30 lakhs, 1% he has to pay. So in such case, advise the clients at least on 31st March to deposit, if source is there, into the bank, so that they can exclude the same from the wealth. So I think you are clear with the cash. Let me revise on this. For individuals and HUFs, cash in excess of 50,000 is an asset. For company assets, all recorded cash in the books is not an asset. Unrecorded cash is going to be an asset as a point. So we did with, what is it, 6 assets, and beautifully you learned all the exceptions. Whether you beautifully learned it or not will be now be tested. In what way? By asking you the questions. To start with, commercial flat lying vacant. There is a commercial flat and it is lying vacant. Will it be an asset? Of course, since we have studied just now, we will be able to tell you very good answers, sir. After the end of the 8th hour you ask, but just as a matter of revision. See, commercial property, if used for the purpose of the business or held as a stock in trade, is not an asset. But if it is kept vacant, unproductive, generally productive assets are not being included, unproductive, it is an asset. Commercial flat given on a rent to a multinational, only in a situation when you are using for your business or held as a stock in trade, it is not treated as an asset. Other way around, once you are letting it out, commercial flat, you are letting it out, it is an asset. Then factory building in which production is carried on. What do we say? Factory building. It is used for the purpose of the business carried on by the SSC. So it is not an asset. Then commercial building in which SSC's office is located. If SC's office is located, he is using for his business, so it's not an asset. Commercial building held as a stock in trade, it's not an asset. Then residential house given to the employee of a company. If that employee's salary is gross salary is less than, what is it, 2 lakhs, that is 5 lakhs, then it is not an asset. Residential house given to an employee of a firm. To an employee of a firm, if you are doing it, it is an asset. Because the exclusion is only with respect to the company SSCs. The exclusion is only with respect to the company SSEs. Then friends, residential house given to a non-working director. Non-working director, what we said? Residential house given to a director who is an employee, not to a non-working director. If it is given to the non-working director, yes, it is to be treated as an asset. House given to an employee of a company who has got a substantial interest in the company and whose gross salary is 4 lakhs per annum. It's not an asset. Then friends, house given to a managing director whose gross salary is 5 lakhs per annum. If his salary is 5 lakhs per annum, what we say? It is an asset. 5 lakhs or more than 5 lakhs. Below 5 lakhs, then it is not. Then house held by the property dealer. For a property dealer, what will happen friends? It is held as a stock in trade. So it is not to be treated as an asset. Farmhouse located 26 kilometers away from the municipal limits of Delhi. If it is a farmhouse, if it is located within 25 kilometers from the limits of the municipality, it is not to be treated as an asset. If it is above 25 kilometers, it's not to be regarded as an asset. Below 25 kilometers, it is an asset. Above 25 kilometers, it's not an asset. Guest house for the use of company guests, it is an asset. Farmhouse situated in Delhi. Delhi local, you have farmhouse means within 25 kilometers, yes, it is an asset. Residential house let out for 280 days, it is an asset. If it is let out for 300 days or more, then it is not an asset. Residential house let out for 300 days, it is what is it? 300 days or more. 300 days or more, what is it? It is not an asset. If it is below 300 days, you are letting it out residential property, then it is to be treated as an asset. Residential house let out to an employee of the company whose salary is 6 lakhs per annum, the house is let out for 320 days. So what is it? See, less than to a company SSE letting to employee whose salary is more than 5 lakhs, it is an asset. But if residential property is let out for 300 days or more than 300 days, it is not an asset. Since it is let out for more than 300 days, 320 days, that's the reason why we say it is not an asset. So you should be very careful to this extent. Then guest house held as a stock in trade. See, point of interest here is any asset you are holding it as a stock in trade, it is not to be treated as an asset. Guess commercial flat let out for 320 days. As far as commercial flat is concerned, irrespective of the number of days of let out, it is to be treated as an asset. Then friends, residential house given to an employee of the SC being an individual and salary of the employee is 4 lakhs per annum. SSE is an individual, but that principle which we have stated is with respect to the company SSEs. If an individual is employing the people and their salary is less than 5 lakhs, he is letting it out, then it becomes an asset. Of course, if it is let out for 300 days or more, yes, it is again not to be treated as an asset. Commercial complex owned by unsold properties. Commercial house, commercial complex, commercial complexes are not to be regarded as an assets. That if earlier you have not written, kindly make note that commercial complex owned by property dealer is not an asset. Motor cars shown in the balance sheet as fixed assets. In the balance sheet, motor cars and land and building are to be treated as an asset. Motor cars used for the transport of employees. For transport of the employees, if motor cars are used, then it is to be treated as an asset. When it is not to be treated as an asset, if it is used for doing a business of hiring them, then only it is excluded. Motor cars of the company given to the director for official use, it is an asset. Motor cars, we are not saying if they are used for commercial own business, they are excluded. बोल के नहीं बोले हम. Motor cars of the company given to a director for official use is an asset. Motor car held for hire, it is not an asset. Motor cars held by the vehicle dealer as a stock in trade, it shall not be treated as an asset. Jewelry held by jeweler, stock in trade. For a jeweler, jewelry is a stock in trade, so it is not to be treated as an asset. Gold biscuits held by the SSC, it is a jewelry, it is an asset. Then friends, silver furniture held by the SSC, furniture in which precious metals, if it is made up of precious metals, definitely it is to be treated as an asset. Semi-precious stone, it is an asset. Diamonds, it's an asset. Then helicopters held by the SSC. Helicopter, what we said, hatchets, boats, helicopter, aircrafts. Aircraft includes the helicopter. So it is to be treated as an asset, is a point to be remembered. Aircrafts for the use of executives by the company. Aircrafts once used by the executives, then it becomes for commercial purpose. Then once it is for the commercial purpose, also it is to be treated as an asset only. Only when it is held as a stock in trade, it is to be excluded. Aircrafts held by the Mid East Airlines for on hire, if that particular aircraft is used for in the business of travel for the companies, Air India and all, those aircrafts, for them it is not an asset. Then cash of 1 lakh held by individual or HUF, recorded in the books, not recorded. Whether recorded or not recorded, in excess of 50,000 it is an asset, up to 50,000 it is not an asset. Cash of 40,000 held by the individual or HUF, whether recorded or unrecorded, it is not an asset. Cash of 40,000 held by the company, if it is recorded, no problem. If it is unrecorded, then whole amount of 40,000 will become an asset. Cash of 2 lakhs held by the company, if it is recorded, not an asset. Unrecorded, it is an asset. Vacant land, if it is an urban land, it is an asset. Land on which residential building has been constructed, then building and the land appertaining thereto is an asset. Land held as a stock in trade, not an asset. Vacant land on which building cannot be constructed as per the law, we said it is not an asset. Land on which factory building is situated, to that extent, in case if the building is there, the building occupied land is not an asset. Then land acquired on your 1/1/2011 for industrial purpose, no construction started till 31/3/2012. See, land is there, if it is held for industrial purpose up to 2 years, it is not an asset, is a point to be well remembered. Then friends, these are the things which I have. And agricultural land, what we say about the agricultural land, if it is a rural agricultural land is not an asset. Urban land is an asset. Then land held as a stock in trade, acquired on 1/1/2003. Up to 10 years, if the land is held as a stock in trade, we don't treat it as an asset, and if it is beyond 10 years, definitely it should be treated as an asset. All this exercise is to help the students to understand that these are the only issues which we have in the problem section, which we are going to take up at the end. Many a time in the problems, these are most repeatedly tested aspects. If this you are perfect with the definition of what constitutes the asset and what does not constitute the asset, probably you are done with 40% of your paper. Now I move to the next aspect of it, deemed assets. Friends, when you listen about this deemed assets, you will remember the provisions which we discussed under the income tax law, clubbing provisions, incomes of the others to be included in the income of the assessee. Like that, here also wealth of others to be included in the wealth of the assessee. Of course, since there you have written very beautifully, I will not trouble you by asking you to write here, except if it is so different from what is being stated in the income tax law. So, as a matter, we will try to quickly finish off this. First thing is, let us suppose there is an assessee. If he is going to transfer any assets for inadequate consideration to the spouse or to the minor child not being a married daughter, then such assets will not be included in the wealth of that spouse or the minor child. They will be clubbed in the wealth of the assessee who transferred the same for the inadequate consideration. Then friends, as I already told, if somebody is kind enough to transfer to the minor married daughter, then this clubbing provision will not get attracted, but no fool will do. Just to avoid the wealth tax, who is having that guts to transfer the same to the minor married daughter, because then the son-in-law will later on become more powerful than wealth tax and income tax authorities. He don't mind paying the tax, and he don't mind not again retransferring the property. He will only say thanks, knowing very well they gave this exception. Then friends, any person or association of persons to whom such assets are being transferred, that is, I am transferring an asset to a person or association of persons who are going to apply that particular asset and the income from that particular asset either for the benefit, immediate or deferred benefit of the assessee or the spouse of the assessee. Then in such case also such a transferred assets must be included in the wealth of the transferor and not into the wealth of the transferee. Then any person to whom the assets have been transferred otherwise than under an irrevocable transfer. If it is in an irrevocable manner, yes, it will be included in the hands of that person only, transferee only. If it is a revocable manner, yes, it is to be included in the wealth of the transferor. Of course, I am not spending too much of the time on explaining what is revocable and irrevocable. What is there under the income tax law equally applies here also. Similarly, if one transfers to the son's wife after the spouse, the most important person in the human being life is the son's wife. So if you are transferring the property to the son's wife for inadequate consideration, or if you are transferring the property to any person or association of persons for immediate or deferred benefit of such son's wife, then also it will not be included in the hands of the transferee, it will be included in the hands of the transferor, clubbed in the hands of the transferor is a point. So these are the things which you have for the deemed assets, but there are certain important points. Of course, these appears more or less like what we have studied there in the income tax law. Let me put before you these points. See, the above assets shall be included even if these are held in some other form other than in which form they are transferred. That's what earlier we discussed there. Intelligent spouses, what they do, they will try to make sale of the assets and use those sale proceeds to invest in another assets. Still the clubbing provisions will do get attracted. So also in the wealth tax also. So assets shall be included even if they are given as a gifts to the spouse and all, because it is for inadequate consideration. Love and affection are not considered either under the income tax law or under the wealth tax, because one intelligent SSE argued in the court, how you will be able to say that when I transferred an asset to my spouse there is an inadequate consideration. Consideration is love. You can't value the love, how much she has given to me. You can't say that it is for inadequate consideration. Then the law said, keep your love with you and your wife. Love and affection are not considered as a consideration here either for the purpose of income tax law or the wealth tax law. Then friends, another important thing is, like, what is most important is valuation date for the wealth tax purpose. Say I transfer to my wife shares. Shares are not assets. So if she keeps the shares as shares, I don't have any problem. Even if one want to try to club it, it is not an asset, either in my hands or in her hands. But that intelligent wife sold those shares and purchased a house property. Now what will happen? I am troubled. On two fronts, liquid sources are converted into illiquid form of the house property, and wealth tax log mere piche pad gaye. Right. And just like under the income tax law, what is stated? For this clubbing to happen, the relationship of wife and husband should exist both at the time of transfer of the asset as well as on the valuation date here, their accrual of the income. So for that purpose, please don't advise a happy families to take a divorce on paper and live in the same room. These are the things which you have to remember. And now that is about section 4, one aspect I covered. Then another deeming fictions are given in 4.1b. Partnership firm, as I told already, is not a taxable entity. So in case of the partnership firm is having assets, what you are expected to do? Calculate the net wealth and distribute the same among the partners. To the extent of their capital, you keep the amount of the net wealth in the same line. If net wealth is in excess of their capital, then that excess you distribute among them in the profit sharing ratio is a point. Similarly, one individual transferred his property, his assets, to a HAF where he is a member for inadequate consideration. Then in respect of such property, the transferor shall be deemed owner. Okay, that HAF got partitioned, the assets in an indirect manner reached the spouse or the minor child. Then what will happen? Then what will happen, friends? Even with respect to that particular assets which reached after the partition to the spouse or the children, it will be included in the hands of the what is it, this particular transferor. Then friends, I move to the next aspects of it, like irrevocable transfer. If assets are transferred in an irrevocable manner, it is the transferee only who is liable. But what is an irrevocable transfer? What is an irrevocable transfer is, which is revocable after 6 years, shall also be deemed to be irrevocable. Let us suppose I am transferring my property to Mr. Krishna Reddy, stating that this property again will come back to me after 7 years. Then for the limited purpose it is to be treated as, what is it, irrevocable, or which is not revocable during the lifetime of the beneficiary or the transferee. Till such time Krishna Reddy is alive, this property belongs to Mr. Krishna Reddy. After the death of Krishna Reddy, again this comes back to me. Of course, Pavan is angry. What is this, sir? Krishna Reddy is 25 years, you are 41 years. How Krishna Reddy will go away before you die? Generally, elders will give the properties to the youngers. Where is the question of younger death happening before the elder? Pavan, please don't be that angry. I am not wishing that it should happen. I am only explaining a provision here by stating that if a transfer is made and a provision is contained in that, that in case if the beneficiary is going to die before the transferor, again the property comes back to him, then what is it? It is as good as, although revocable at a later date, now it is to be kept under the status of a irrevocable transfer. Then friends, I move to the next, this thing is gift by book entries. Some people will do the gifts by making the book entry. I made in my books an entry that I have given a so and so asset to Mr. Krishna Reddy. Actually, I am enjoying that particular asset. In the books there is only a mere book entry by which I am transferring the same. There also what the law says, that is, where a gift of money from one person to another is made by means of entries in the books of accounts maintained by the person making the gift, the value of such a gift shall be liable to be included in the net wealth of the person making the gift, unless and otherwise it is proved to the satisfaction of the assessing officer that the money has been actually being delivered to the other person. Here book entry say आप gift दिए तो that money will be included in your hands only, not in the hands of the transferee, unless you prove to the satisfaction of the assessing officer that really you handed over that money to that particular donee. Then friends, holder of an imperitable estate, in case of the HUF property, karta shall, for that particular property, that will be included in the wealth of the karta. Then if you are a member of a cooperative society which allots you the flat, although cooperative society is a legal owner, you shall be deemed to be the owner of it. Accordingly, it is to be treated as a part of your net wealth. Who said so? 4.7 says so. 4.8, deemed ownership on possession. Transfer of the property is happening in the mode referred under section 53A of Transfer of Property Act. What is section 53 of Transfer of Property Act? Section 53 of Transfer of Property Act says what? Agreement is entered, money is received, possession is handed over. What is not happening? Registration is not happening. So on that pretext it is to be treated as a real transfer only. Transferee is only to be treated as the owner, although registration is not happening. In his name is a point which we have already discussed there also. Friends, with that, two important aspects I covered. One is what is asset, what is a deemed assets. Under what circumstances, although SSE is not the legal owner, still he shall be deemed to be the owner for that, and such assets are to be included in the net wealth of the SSE.